In the aftermath of the Russian invasion of Ukraine and the imposition of Western sanctions, the Russian ruble fell about 20%, but fairly soon after the ruble recovered, and with high oil prices, it suggested that the Russian economy wasn't being affected by sanctions. But the strength of the Russian ruble was really artificial. It was strong for three reasons. Firstly, the Russian government imposed capital controls, making it very difficult for Russians to sell rubles to buy dollars. Secondly, because oil prices were quite high, boosting export revenue. And thirdly, import fell because of Western sanctions. And if you import less, then that ironically strengthens the exchange rate because you're selling less rubles, buying less foreign currency. But the ruble was strong really for artificial reasons, and trading volumes fell quite significantly. And a more realistic exchange rate is that on the black market, where the demand for the dollars is much higher than the ruble. So what is going on with the rest of the Russian economy? How strong is it, and how will sanctions affect it in the medium and long term? Well, first of all, the economy is definitely suffering the ill effects of Western sanctions on not being able to import a lot of components and parts. So if you take, say, for example, the airline industry, Russia has no airline industry. It relies on buying planes from Boeing and Airbus. And so now it's no longer able to properly service its planes and get replacement parts. And this means that it'll be increasingly difficult to fly in the coming years. And it's a similar situation with cars, and the automobile industry has been quite hard hit. So although Russia wishes to be autonomous, in reality, it's far from that, especially in high-tech industries. And this has meant that some goods and services cannot be bought. Also, imports have been falling even to China. And it was hoped that Russia will be able to pivot to China, kind of replace Western imports. And the reason is that China needs Russia much less than Russia needs China. Because the biggest export market for China is still America. Over $500 billion of exports went to America. But by comparison, only 70 billion to Russia. So Chinese companies, although they're under no Chinese sanctions, they don't want to fall foul of Western sanctions, and so they have been voluntarily cutting exports to Russia. Another consequence of this steep fall in imports is that it's been pushing up prices. And although the official inflation rate is around 20%, in reality, many sectors are seeing much higher increases in prices because of a shortage of components and goods. And you can see in sectors such as technology, the prices have been going up really quite significantly. And this has hit the Russian consumer, and sales have been falling for automobiles and general sales. A big fall in consumer confidence, big fall in investment confidence. And the whole effect of the sanctions and the changed view of Russia in the world has meant that many Russians have sought to leave the country. It's estimated around 500,000 Russians have left the country, and amongst these are the most highly mobile and highly educated, and around 14,000 ultra-high wealthy individuals have left, and this is people with incomes, wealth of more than $30 million. A lot of these have gone to places like Dubai, and Dubai has seen a huge surge in demand for property as Russian exiles are looking to store their wealth outside Russia. The problem is that when these wealthy, educated and mobile people leave, it affects the long-term prospects for the Russian economy because they're losing some of their entrepreneurs and potential investors. Now, another issue for the Russian economy is that it's very dependent upon oil and gas and coal. Energy accounts for 60% of the Russian government's budget, so any fall in revenue from this will severely affect the government's ability to pay wages and benefits. Now, initially in March, Russia actually benefited from very high oil prices, but oil prices have actually started to fall as the impact of the war recedes. And in addition, Russia has not only had lower global oil prices, but also China has been buying at a discount. So China has been buying more Russian oil, but it's been using its monopoly buying power to pay a $35 discount on the global price of oil. So this shows how, when it comes to Russia-China relations, China's in a stronger position. And the problem is, as a high-cost producer, producing the Siberia and difficult to access regions, this lower price is really eating into Russian profit margins. And Janet Yellen has a plan to try to limit Russian oil to $40 to $60 a barrel. So that would further reduce Russian oil revenues if it is implemented. Now with gas, Europe and Germany in particular is quite concerned that Russia may use its leverage to cut off gas supplies, and that would be really quite damaging for the German economy, especially over winter. But it's worth bearing in mind that in many ways Russia needs Europe more than Europe needs Russia. 83% of Russian exports of gas go to Europe, but Europe imported only 46% from Russia, and that's before the war started. And even in the past few months, there's been a big increase in imports from the United States, liquid petroleum gas. And this has actually outranked imports from Russia. So it's quite a dramatic shift that already Europe has been able to replace quite a significant amount of Russian gas with United States gas. And the problem is that Russia has been reducing pipelines of gas to Europe, but it will hurt the Russian economy because it's such a big component of Russian revenues that if it stops selling gas to Europe, it will really affect Russian revenues. Also, in the long term, the whole crisis may motivate the economy to find more energy reliance, more renewable energies, to shift away from relying on fossil fuel imports. And also, Russia has become seen as an unreliable energy provider because the whole principle of OPEC was that you would guarantee supplies no matter what the politics is. But with threatening to cut off gas supplies, it's really motivating Europe to, as quickly as possible, reduce the purchase of Russian gas and oil. So it will happen over the coming years that Russian oil production may fall and gas revenues will ultimately fall as well. And since the war started, the Russian government and central bank have been trying to prop up the economy with higher spending and increased supply of money. M2 money supply has almost doubled since the start of the year, and this indicates future inflationary pressures that may reduce living standards further. As well as a flight of people, there's been a capital flight with foreign multinationals withdrawing from many Russian operations. And it was estimated that around 40% of Russian GDP was linked to multinational investment. And so as Western companies withdraw, this will leave a hole in the Russian economy. Around 5 million jobs are linked to Western investment. Now, to some extent, Russia is able to deal with this. For example, it's overtaken many McDonald's outlets and introduced its own brand name. But in the long term, it will be very hard to regain the trust of multinational companies when events like this occur. So the long-term knock effect to trust in the Russian economy is quite severe. So overall, the outlook for the Russian economy is fairly grim. In the long term, revenue from gas and oil is likely to fall, but it will be difficult for the economy to diversify because of the sanctions, lack of business confidence, and also the levels of corruption in the economy. So although the official Russian ruble exchange rate remains quite steady, in reality, this doesn't reflect the underlying pressures in the Russian economy. Whether sanctions will have an effect in the political world is hard to say. If you look at previous examples, often they don't. Iran, Iraq had sanctions for many years and it affected no political change. But that's beyond the scope of economics. But from an economic perspective, definitely the Russian economy is in a bad state and a lot of things are pointing to longer term problems.